Welcome to November 29th, 2025. Let's talk finance. Hey, how's everybody doing? It's been a whole week. I ain't seen y'all. 7 whole days and not a word from you. Okay, that was my Tony Braxton impression. How y'all doing? I hope everybody had a great holiday. I know people are still celebrating because we're in the holiday season. It's festival, it's friends, it's family, it's loved ones, it's food, it's sales. I know we're doing all of the above. I just say do it in moderation, be careful, be intentional about being safe and protecting your space. That's always so important. If you encountered some lows this week, everything just quite didn't work out how you see fit for things to have worked out, don't worry about it. Guess what? We all go through things. Just don't stay in that space. Get up, dust yourself off, do it all over again because you're granted that opportunity, okay? Don't want you to stay stagnant and in one space. You don't have to. It's not necessary, right? You always got to look at things, as I say, from an octagon's perspective, okay? So, yay! Hey, guess what? Ooh, we getting into my weather, baby! It's snowing outside. Was that Boys to Men? Let it snow. Yes! Ooh, and look, that's between me and y'all, right? After the show, I'm going outside to play in the snow. So, yes, I know you all know me. I love fall and I love winter. If I could relocate to Alaska or the North Pole, I would be there. I promise you I would. But okay, enough of that. Thank you for tuning in to Let's Talk Finance. As you know, I like to kick off the show with fun facts. So we're going to kick today's shows off with fun facts dealing with the history of the 12 months in the calendar year. So, you know, I'm very inquisitive, right? I want to know who thought of this? How did it come about? When did it come about? Was someone sitting on the floor thinking about this and jotting it down? Like, what was the whole concept of this? So, guess what I did? Research. Yep. Woo-hoo, research. So, here is what I found out. And I don't know about heart, so I'm going to be reading my notes that I found out. But check it out. Let me tell y'all about January through December. So, the 12-month calendar originated from the Julian calendar, which Julius Caesar implemented in 45 BC to align with the solar year based on the Egyptian solar calculations. Like, I thought that was phenomenal. And what I like about doing research, they get to show you all these little clips and how it was made and what it was done, these little videos. To see that was so interesting. Like, oh, it was so mind-boggling. I was just in a state like, I don't want to move. Tell me more. Tell me more. Now, initially, the earliest Roman calendar had 10 months, and it was 304 days a year, not 365, with an unnamed 61-day winter period. Now, let's stop there. So here's my problem. For the summer, you get 90 days. But for the winter, you only get 61. I got a problem with that. Like, my feelings was hurt about that. But, okay, that's just me. Now, here comes the fun part. Numa Pumpopoulos added January and February to the calendar. Shout out to Numa Pumpopoulos because they thought about me back then because they knew I was going to need more than 61 days. However, instead of it being a 10-month calendar now, because Numa Pumpopoulos added these 2 extra months, January and February, that brought us to a 12-month calendar year. The year used to begin in the month of March. Now, Julius Caesar adjusted the calendar to have 365 days solar year, adding leap years to account for the extra quarter day. He officially moved the start date from March 1st to January 1st, eliminating the extra intercalarious months. I was like, wow, that took a lot of time to do that. Like, what was your thought? How did you implement this? How did you come up with such a thing like this? How did you know? Like, I just found it very, very amazing. Now, many names come from the Roman god and goddesses, including Mars, which is March, Meha, which is May, and Uno, which is June. Months named for leaders like July. That was the month I was born in. Yes, okay. It was Julius Caesar and the successor, Augustus Caesar. Some months retain names based on their original number in the 10-month calendar. So it wasn't implemented from gods or goddesses. If you were within that 10-month time span, which was March through December, excuse my mispronunciation, you were in that 10-month, your months went by the number that you were. So for September, back then it was the 7th month, October was the 8th month, and so on and so on. That's how that went, but they still had their names. So that is how we came up with the 12-month calendar year. Like, I'm super excited about that. Like, I'm going to dig more into it because now I want to know the origin of the names and this and that. But that's just me. Don't worry about that. So, hey! Thank you for tuning in to Let's Talk Finance. Got just a few announcements for you. Just a few. The content. Thank you all for tuning in. Your love and your support, your comments, your feedback is so necessary. I do not take that in vain. Believe it or not, I take 1.5 days out of that 7-day time span, and I go over all the questions, all the feedback, and I sit down with my team and we talk about it, and we implement new things because your word matters to me. You may not be physically sitting at the round table, but do know that your information is at the round table because you're just that important to me. So thank you for tuning in. Thank you for liking, loving, and commenting and sharing. Again, this content is free. It takes 3 seconds to hit that share button. You don't even have to say nothing. Just hit the share button. We have to get used to sharing anything of importance, whether we think it's important or not. And I think when we're talking about education of finances, that's something very important to share, whether it relates to you or not. I think that it should go viral. So let's continue to push this information because, again, it's not in schools. It's not in the curriculums no more. They don't teach it with onboarding when you get hired anymore. It's just not there. So you basically have to fend for yourself. And at the end of the year, when you file your tax return, beginning of the year, you know, there's a lot of questions, and it stems because you didn't know, you were unaware. So thank you so much again. I appreciate all the feedback. It is definitely warranted and needed. So we're going to jump right on into Let's Talk Finance. Woo! The show where we break down money matters, clarity with the heart and faith. So today we're going to do something a little bit different, right? And I was going to wait and do it, but due to the weather and the conditions out there, my guests rescheduled. And again, safety first. I don't want anyone driving to come and talk and it's a bad snowstorm out there. I care about you as a person as well as everybody else out there driving on the road. So no, so that was rescheduled. So however, when I thought about this, I said, I think it'll be good now, especially since we only have one more day in the 11th month before December gets here and we close out 2025 in its entirety. So think think of this as your final exam. So you're in school, they give you all these impromptu tests, quizzes, they give you open book tests, and then at the end, you have this big final review, right? So think of this as a miniature final review that we're going to have as we talk about 2025 and going into 2026, okay? So now, because we're going into a new year and because of the changes that came with the bill that was implemented on the 4th of July of this year, of course, a lot of people are asking a lot of questions. And yes, eventually I am going to talk about the bill. I promise you all, I am. I'm going to get into that and I'm going to answer all of these questions. But the questions that I've been getting mainly is asking questions about tax breaks. Are there going to be any deductions? Are there going to be any credits? How does tax year 2026 look for me? So I'm going to give you a sneak peek, like a new movie that's going to come out. They give you a sneak peek. I'm going to give you a sneak peek of what's going to happen in 2026. Now, in order for you to know more, you got to watch the show. You got to watch Let's Talk Finance. Again, who don't want to know about their finances, their cash flow, whether they're at a positive or a negative, you want to know. So now, taxes and credits for tax year 2025. Because remember, even though we're in tax year 2026, we're going to be filing out for a tax year 2025. So anything you have done between January 1 and December 31st, 2025, that's what you're going to be reporting next year for 2026. Again, I will not stop saying this. As long as we're able to file taxes, tax laws change every year. They do not stay the same at all. They will change. Now, as I stated prior on the show that I did July 26th, we can sit and we can listen and take all the tests, get all the updates and study for it. Come January, with everything we learn, that'll all be thrown out the window and something else new will come. It just comes with the territory. So let's talk about how the changes of education, health coverage, housing, and taxes will potentially impact you. And when I do some shows next year, again, I am going to be digging deeper into this as it relates to the bill and as it relates to us. So don't worry. I got you on that. I promise you, I will not leave y'all hanging. Again, because so much is changing, I don't want to tell you something now and then next week you be like, but we heard something different. So I'm just waiting till all the changes are signed, sealed, delivered, and nothing else is going to happen, right? Now, don't worry, because we're going to be diving into that. However, let me give you some highlights. So once the bill came out in July, anybody that before it came out, anybody that was receiving a third party 1099K would receive a 1099K at the end of the year. They would have to report their earnings and their transactions. That was one of the requirements. However, that's no longer a requirement unless you have made $20,000 or more. So let's just say you have a credit card machine or you're using Square, and let's just say you made $1,500. Well, they're not going to send you a 1099 for that. What they are going to do is if you made $20,000 or more, they're going to send you a 1099 for that. Now, because it changed this year, there is a chance that you will get one from January 1 up until the month of July. And then anything after July, you may have to dig into your statements, look at your invoices to capture all your income so you can file out on your tax return. Now, earned income credit for tax year 2025, the max is $8,400. $46. Last year, it was $7,830. So you got an increase. The child tax credit, of course, went up as well. It's no longer $2,000 per child. It is $2,200 per every qualifying child. Let me say that again. Per every qualifying child is $2,200. So the key words were qualifying child, which means you have to meet certain requirements: the age, the relationship, the income test. You have to meet all those factors in order to get that. Now, it depends also on your filing status and the number of qualifying dependents that you're receiving earned income credit for. So keep that in mind. I know someone is going to call me and say, well, my cousin did their taxes and they got 5 kids and they got $9,000 for each one. Well, unfortunately, here at Anointed Accounting, we don't know your cousin. And I'm pretty sure we didn't do their tax return because I didn't even call out a number for 9,000. But someone's going to call and tell me that. I know it. It happens every year. Now, standard deduction is still on the tax return, as well as itemized deduction is still on the tax return. However, I need for you to understand the difference between the two. Some people say, well, Shavonna, why can't I have both? Because both does not qualify for you. It's either one or the other. The standard deduction lowers your income by a certain amount. So that's a fixed rate. The standard deduction is. Whereas your itemized deduction is made up of a list of eligible expenses. So let's say you file your tax return and your standard deduction is $12,000. That's at one set amount. That's the only amount that is going to be deducted to lower your income from that amount. Whereas if you itemize and you're eligible to itemize, let's say you itemized up to $18,000. Well, the $18,000 is going to help your income, your taxable income, more so than the standard deduction. So because that'll help you, we're going to go with the greater part of it. Now, in order for you to be able to itemize your deductions, a lot of people pay property taxes and real estate taxes. A lot of people pay a lot out of pocket for health coverage, medical coverage, prescriptions, long-term care facilities. That's considered an itemized deduction. So, of course, the amount of money that you spend, you may end up spending more than what the standard deduction is. So it helps you with your tax return, okay? Not everybody qualifies for that. That's why it's best to sit down and have that conversation with your accountant. Also, refundable credits versus non-refundable credits and why this matters. Time and time again, taxpayers will say, well, the company told me that I'll get a refund if I get this product. No, that's not what the company told you. The company told you that it could potentially be a non-refundable credit that sits on your tax return if it qualifies. So let's talk about what a refundable credit is. If the tax credit exceeds your tax liability, you get the remainder as a refund. Earned income credit, child tax credit. That's a refundable credit. Okay? So let's just say your taxable liability is $2,000, right? Now, your taxable credit exceeds the $2,000 that they're looking for you to pay. So let's just say your amount is $3,000. I'm going to keep it small, $3,000. So that $3,000 is going to wipe out that $2,000 that you owe, but that $100, because it comes from earned income credit, child tax credit, is going to be potentially your refund. Now, the non-refundable credit can only reduce your taxable liability. So again, we're going to use that same $2,000 that you have. That's your taxable liability. That non-refundable credit let's just say it's for the same amount, $2,000. Well, here it is. You're breaking even now. You're not going to look for nothing back from them. They're not going to look for nothing back from you because it balanced out. It wiped itself out. Now, if it exceeds it, then it could potentially roll over to the next year and it's still a non-refundable credit. But don't let someone tell you if you get this product, you can write it off on your tax return and it's going to be a refund. That's not true. If they tell you that, please contact Anointed County. Understanding your filing status will also impact the way you file. So you can't say that you're single and you're married. You can't say that you're head of household but have no dependents. You see how that works? So there's ways to help you. Let's just say you're married, but you don't want to take on your spouse's debt. Well, here's the injured spouse form that we can fill out for you. Or let's say that you're married and you've been filing correctly, married filing separately because both parties have agreed to do so. Both of you all sit on each other's tax return. That is acceptable. But you can't say, well, I can't file my tax return because I don't want to file with this person because of this or because of that. There are laws and forms that are out here to protect you. And that's what we're here to do, to help and protect you. So these are just some small tips to look forward to for tax year 2025 that's filing out in tax year 2026. And again, I'll be making not only announcements, but post and keeping you all updated. Plus, when you tune in to Let's Talk Finance, I give you all these announcements anyway. So now I want to talk about business and income essentials. That's a lot. Let me take a drink. Did you know that H2O is very good when you put ice in it and put it in the freezer and it get all slushy, and then when you sip it through a straw, your teeth get cold? Oh my God, that's like the best water ever. Okay. But anyway, so typically a lot of business owners come in with this question because if they don't have the funding, they want to know how to get the funding, or if they qualify for the funding, or it just comes up as a typical question. Capital. That's what we're talking about, capital. I get a lot of people that ask questions about working capital, debt capital, or equity capital. And there's a difference between all three. So let me tell you what they are. Working capital is money used for day-to-day operations, period. That's money that you have in the business. Maybe it's a petty cash. Maybe you have deliveries that's being delivered to you and you do CODs, cash on delivery. Or maybe you're short on postage stamps and you need to run to the post office to purchase stamps. That's what that money is there for. You have it if you need to go into it. It takes care of the day-to-day operations for the actual business. Not you personally, but for the actual business. Equity capital is investment from owners and shareholders in the business. So let's just say you have shareholders that's in your company. They have made investments. So that's equity within your company. You can't just go and say, oh, I'm going to pull this down. No, it's a process to that. Those are your investors. A board meeting has to be called. They may offer other solutions, but that's just something that's not readily available for you to say, hey, it's Tuesday and I'm short like $300 on the gas bill. I'm going to go get it out of equity capital. Absolutely not. It doesn't work like that. Now, debt capital is money borrowed that must be repaid with interest. So let's just say you took out a business loan for $20,000. That's a debt to the company because that's money that you have, and that loan is still sitting on your books. That loan also transfers over to your balance sheet, and you're going to have to pay that loan off monthly. Does it come with interest? Absolutely. They may say no interest for the first 10 months. Okay, if you can pay that 20 grand off in 10 months, I highly suggest you do that. But if you're unable to, just know that interest is going to be attached to that debt capital. and it's going to sit on your books until it is paid off. So that's so important. Now, your withholding forms, the W-4, the W-9, and the ILW-4. And let me stop right there. I say ILW-4 because I work with a lot of clients from the state of Illinois. That does not dismiss the clients that I work with in Michigan, in Wisconsin, in Florida. It does not dismiss you all. The tax forms have the same foundation, but they're very different. Like some states, you pay state taxes and have state withholdings, whereas other states you don't. So prime example, Florida, you don't pay state taxes. So you wouldn't have a state form to fill out, whereas the state of Illinois, you do. The same with the state of Indiana. You have a state form that you must fill out. So it's important to know what sits on those forms, because those forms are a domino effect to what's going to happen when you file your tax return. What do you mean by that, Shavonna? If it's not correct, your information is not going to be correct. It's people inputting data, but they can only input what you submit. So if there's a misspelling in your name, your address is incorrect, or you moved and didn't update it. Let's just say it was a new addition added to the family and you didn't account for that. That's important. Contractors, you're filling out form W-9. So when you're bidding on these contracts, when you're doing work for other people, do not give them a W-4 if you're not on their payroll. You are going to give them form W-9 because you are an independent contractor, which means they do not control your time. You are not on a set schedule. You have a project to do, or you have an event that you're hosting, whatever it may be. They're not stating, well, you have to be here Tuesday through Friday from 7 p.m. to 7 a.m. That's a W-4 because now they're giving you a schedule and controlling your time. So make sure that you fill out those forms correctly. Now, is there a difference between a 1099 worker and a W-2 worker? Absolutely. And again, I talked about this in July. So if you want to go back and watch those shows for more information, they're on our YouTube channel. But again, this is just a preview for the final review, right? So the difference is between a 1099 employee and a W-2 employee. You have the freedom and flexibility if you're a 1099 worker. So let's just say I submitted a W-4 because they don't control my time. I can go into work when I want to. I can make my own shift as long as the responsibilities that have been put in front of me are successfully completed. That's me being an independent contractor. Also, because I'm not on their payroll, I have to cover my own insurance. It may not be matched by the company because the company isn't offering it because I'm not a W-2 employee. Because I'm a W-4 worker, I also have to account for that 25 to 33% tax withholding for estimated tax payments. Because when they pay me, they're going to pay me in full unless I elect to have taxes taken out. You can do so. But majority of the W-4 workers do not have taxes taken out. So if the job is $5,000, when the job is completed, that's what your check is going to be written for, $5,000. That's the benefits of being a 1099 worker versus a W-2. Now, if you were a W-2 employee, again, they control your time. They give you a schedule you have to go by. There is insurance that you would have to pay bi-weekly or semi-monthly, but the company is also paying a portion of it as well. And the company is withholding federal, state, Social Security, Medicare, FICA taxes, all coming out of your check. People, quick note, look at your check stubs. Please look at your check stubs. It's so much information that I need to give you all. It doesn't feel like an hour is enough every Saturday. But As long as there's breath in my body, as long as you all have questions, I'm going to keep answering them, and I'm going to keep delivering this information to you because it's important. Track all of your income and your expenses and your out-of-pocket costs. That is so very important, especially for 1099 workers, because again, let's just say you have company ABC, that company made $60,000. My question to you is, where's your expenses at? Because if you don't have any expenses, then you're paying taxes on that $60,000. So if I tell you that your taxes, the amount that you're going to have to pay to the federal and the state is about $7,000, you can't get upset, because if you were a W-2 person, they would have already taken that out of your withholdings. But because you got your money directly up front, you didn't elect to withhold those estimated tax payments that Shavonna always tells you about. Now you're going to have to pay for that. You want to be aware of your tax write-offs, your tax credits, your deductions, your refundable credits, your non-refundable credits. You want to be aware of what is directly tied to you, how it can benefit you. You want to know if something can reduce your taxable income as well as your liability. Now, here's something I wanted to tell you all. I'm glad I got my side notes. I love this. Speaking about that, a lot of people say, well, I have this, Shavonna, and this can be a write-off for me. Well, no, it can't, because that doesn't apply to you. You're on a W-2, so you can't write off your uniforms. You can't write off your meals because you're not a 1099 employee. The company covers everything for you. So here it is. A tax write-off does not directly reduce your tax bill. It reduces your taxable income. Did you get that? It reduces the taxable income. So if your taxable income is $10,000 and you got a tax write-off, and that write-off was $2,000, it's reduced by $2,000. So now the tax that you're paying on is no longer $10,000, you're paying on $8,000. That's important to know. That's important to know. Now, a tax deduction is the amount that you subtract from your income when you pay, so it's not so much on you at the end of the year. That's the tax deduction. So you, whatever you paid, you're going to subtract that from that amount. Again, let's use that 10,000. Say you put in 2. Now it's only 8 more thousand that you're being concerned with. Now, a tax credit is dollar for dollar, like the refundable credit. So let's just say you have this tax debt in the amount of $2,000, but now you have a tax credit, and that tax credit is $2,000. Well, guess what? It hit it dollar for dollar. So now you no longer have to worry about it. If you have an amount to pay, it may not be astronomical because of that tax credit that you had. Now, commingling funds. If you are still commingling funds, that means you were not listening to me at all this year. Do not commingle your funds, people. Treat your business as a business. Separate your business from your personal income. And let me just tell you why. And I'm going to use me as an example because I know me, right? So I hand all of my information off to my account, right? So let's just say I was commingling funds and I had a fetish of watching elephants and dinosaurs run around in the park. And that ticket was $100 per ticket. I may not want everybody to know I like to watch elephants and dinosaurs run around in the park. But because I'm commingling funds on my personal and business, I got to submit all of this to my accountant. So as they're going through my books, they're going to say, Shavonna, what is this $100 charge? Can you explain this? What does it have to do with the business? I don't want to do that. That's too much explaining. So I don't have to explain. Let me find a way out of that. What can I do to separate this? Personally, let's just say I got a transaction coming out and it's not for the business. Now that then came out of my personal income. So now I got to go submit a memo, get my money from the business. It's just too much. It's a headache when it's not necessary, when I can have two separate accounts. So people, stop commingling your funds. Separate your business from your personal. It's two separate entities. Estimated tax payments and IRS monthly payment plans are of essence. If you're on a monthly payment plan, please continue to pay your monthly payments. You have to. If not, you will get kicked off the payment plan. To get back onto the payment plan, the fee now is $275, and that has to be paid up front. Your estimated tax payments is to help you. That helps you because, again, you're a 1099 employee, or you're in a totally different tax bracket and you did not elect to have more money being withheld. So now at the end of the year, you have a high tax bill. Well, you didn't pay estimated tax payments. So on all that additional money that you receive, because no taxes were paid, you now have to pay money on that money. Pay the estimated tax payments. Your deadlines. That's so very important. And the IRS is being very, 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 very strict on you having an IRS ID Me account. Please set up that account. If you're in the state of Illinois, set up your My Tax Illinois account. Those accounts are so important, people. Those accounts tell you about you and what's connected to you. You need to know what's connected to you, period. And I know you're saying, okay, Shavonna, but this is November. And la, 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 la. Guess what? December going to come and pass, and now we're going to be in Q1 of 2026. And we don't want to leave you behind. We do not want you to get left. We want you to come on board and take this trip and have fun. But with having fun, there are some rules and regulations that you just got to follow. And it helps you. You want to stay compliant. You want to be intentional. You want your Q1 to start off with a powerful bang. Like, you don't want no mishaps. I say all the time, this year in 2025, this has been my preparation and my teaching year. This year, I feel like Pinky in the Brain. I could take over the world, but I'm still in that learning phase, because learning is endless. It never stops, especially when you're trying to be a successful business owner. Now, since I want to be a successful business owner, and I'm not only talking to successful business owners, but individuals, period, let's talk about financial planning and protection. Oh, let's talk about that. That is so important. The importance of financial planning when it comes to a healthcare proxy, a living will, or a POA. And again, these are topics that we typically don't talk about until it's time to talk about it, and then it's too late. These are conversations we need to have, if not every quarter, at least twice a year, because the inevitable will happen. So I'm going to start off with a POA, which is a power of attorney. That is a living document giving someone authority that you trust to cover your finances. So, prime example, Lord forbid, if I'm unable to take care of myself, I will turn over everything to my spouse. Now, a healthcare proxy. That's when you appoint someone to make medical decisions about you. So I'm married, and if anything happens, God forbid, my wife would be the one to make that decision, to tell me or to tell the doctors what to do. That's that healthcare proxy. The living will is a legal document that specifically outlines health treatment plans. So let's just say, talking about me, well, let's say I take this medication, I take that medication, I go to the doctor this day, I go to this day. Here is how my schedule is set up, and I want it to continue to flow like that. If there's any changes whether it's doctors, whether it's medication, what's going up, what needs to be looked at. That's all going to be documented. So the person that's overseeing what's going on will be able to know how to delegate and handle their responsibilities. A living trust is a legal arrangement that's created during your lifetime to manage your assets. Like, you don't want to go to probate court. A lot of people don't. And a lot of people say, well, I don't really have much. I'm going to just leave it to my kids. You don't know. Do a trust. Do a living will. Whether you don't think your kids will argue or fight, a lot of things happen during this course because now you're commingling anger. You're commingling you being emotional and upset. It's an emotional roller coaster that you're on. So you're not thinking logically. You're thinking with your feelings and your emotions. So if it's in writing, you can't get mad at nobody because you already left it how it was supposed to be. Now, what else do you need to do? Build you a one-page protection stack. I talked about this. Guardianship plan, crisis plan. Build this one-page stack and make sure it has 3 actions plus who to tell. So if anything happens to me, you're going to tell my wife, she going to call my sister and my best friend. That's the order it's going to go in, and then everybody else to know. But that's my actions. You tell somebody what happened. This is what I want done. Period. This is how I want it. It's all laid out. No one can go against that because it's a legal document. Guardianship plans provide clarity and legal direction for the person that you're caring for that's unable to care for themselves. That's important. So if you're over someone and let's just say you feel like you're getting up in age, this may be a little bit too much for you or your health, get that guardianship plan in order. Get with an attorney or write it up and get with a notary and get it notarized. Seal it, put it somewhere, give it to a trusted person. Your crisis plan is a personal guide for your financial health and emergencies. So if anything happens, this is who you call. Typically, people go to their phone and they have an ICE contact, which is in case of emergencies. Have it somewhere everywhere, because what if people can't get into your phone? What if you have a code that no one can break? What if it takes 3 to 4 days? That's too much time that has lapsed when you can have this document somewhere. The digital legacy plan is so important. And guess what? I'm redoing mine for next year. I try to update mine every year. So yes, I love it. It outlines your accounts, your passwords, your usernames, the accounts that you have. So if the inevitable happens, the person that you appoint will be able to go in and make the necessary changes. Your benefits audit checklist. That's important. Make sure you get with HR. Go over your benefits. Know what sits under your coverage. Know if you have to get a secondary coverage. Also, some of these plans are beneficial when it comes to your taxes as write-offs. Your recovery 3-tier plan. I love that. I have to work on that myself. Your recovery 3-tier plan. And that's a I must section, which means this is what must happen. Like on my plan, it says, if the inevitable happens, God forbid, I want an iridescent purple casket. Don't get me the color you want. I want purple. Period. Period, point blank. That's it. That's all. Don't ask no questions. I want 2 purple doves. I know they come white. Paint them purple. I don't care what you got to do. Just make them purple. However, that's a I must for me. That's that list. I care is, okay, I care if you have this picture, but I'm okay with that one. Yeah, it's up there, but it's not up there with I must. I care about it. And then here comes everything else. Whether, okay, well, we'll put the flowers on the left. We'll have them on the right. Whatever that may be. So make sure you have those 3 tiers: a must, I care, and everything else. Please protect your finances in your business and personally. That's important, because if something happens, people need to know how to move around and delegate, if they have to delegate responsibilities on your behalf, dealing with emotions. We have to think about the next person. Now, I know in July when I did a show with Miss K and Miss Angel, we talked about having peace in your business. Just like you have peace in your home, you have peace in the workplace, you need to have peace in your business. You need to be ready. You need to have a safety nest. That's so important. You cannot forget about building that safety nest for yourself. That's important. And I love to keep telling you all about that, because I don't want you to forget. I know it may not be at the forefront of your mind like it is mine, but you will remember it because I've stated it. Don't forget that mental health also impacts your day-to-day activity. That's why it's important to get up, walk away from the desk, take those 15-minute breaks, woosah, walk away from what you're looking at and come back to it. Distract yourself, laughter. All of that is good when you're working. Vacations is also good. It's okay to take off. And as we just learned, you can get all the money in the world for working, but you cannot get your time back. Your time should be just as valuable as the money, if not better. So you have to make sure that you prioritize you in all of this. And how do you do that? With gratitude and stewardship. Yes, 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 yes. So now, the importance of gratitude and stewardship with your finances is you're thankful for what you have. You know how to use it, but you want to give back. You want to help with what you have. And so we define financial stewardship as responsible management of your money and your resources. Responsible. Let's go back to being responsible. You're not responsible if you're commingling funds. You're not being responsible if you don't have your IRS ID.me account ready. You're not being responsible if you have not made that appointment with your accountant, especially knowing that laws change every year and it was a bill that was passed in July. You're not being responsible. If you're waiting to the last minute and you're trying to bum rush someone, that's not being responsible. So you have to be responsible and thankful for what it is that you have. Reflect on the lessons that you learned in 2025. So this year alone, I learned about creating boundaries for the business. It's okay to say no. It's okay to run your business and be in compliance and still say no. Because if I'm out of here, the business ain't gonna run. If I'm not mentally well up here, the business is not going to function. You have to have a cutoff period. I've also said this has been my humbling and my learning season. I've learned so much this year. I'm just like, wow, why didn't I know this? Well, guess what? It wasn't time for me to know it. It was time for me to know it this year. So I can help you all this year going into next year. Okay. So now, as you're reflecting on what you learned, again, treat your business like a business, people. It's so important to do that. Be accountable for yourself. Because you expect everyone else to be accountable, you have to take some type of accountability in what it is that you're doing. You have to be able to communicate. We're not mind readers. We don't know. We have many clients. We deal with so much on a day-to-day basis. We can't always have your situation right here at the top of our head. We can't. It's impossible for us because we have a lot to do. Be responsible. Make that phone call. Make your time matter with the person that you're spending your money with and you're talking about your finances with. If that's not important, I don't know what is. Now, here's the analogy that I just gave my friend. Because one of my friends just told me, girl, I don't be thinking about that. When I get it, I get it. Because you be what, friend? Girl, did you see this on social media? If you got time to sit on social media and look at garbage 5 to 10 minutes a day, if you take that 10 minutes for 7 days, that's 70 minutes. That's an hour and 10 minutes. You could have got a whole lot of stuff together to get ready to get to the person that's doing your taxes. So be accountable, be responsible, know what it is that you want to do. Set those appointments. As we talked about November 8th when Mr. Owens was here, investing. Start investing. Start making your money count. Make it grow for you. And again, I still have that network of people. I still have his information if you need to reach out to him. As a matter of fact, I have another appointment with him getting ready for 2026 because I want my 2026 to start off strong. I don't want no mishaps. I don't want no problems. I don't want no issues. I don't want any of that. I want to be ready because the old cliche says if you stay ready, you don't have to worry about getting ready. And I love that. So I know I talked about a lot today, but again, I did say this was a review class. I'm telling you about everything that we pretty much covered this year and also getting you ready for 2026. Right now, excluding today, we have 32 days before the end of the year. 32 days. Now, that's just something to think about right there in itself. So now that you know you have 32 days left, within those 32 days, you're going to have a holiday that come in there. And whether you also celebrate the holiday eves and the day afters, you might as well deduct those 4 days out of the 32 days that we have. So now what are you left with? 27 days. 28 days, I'm sorry. So get ready. Take that time to get ready. 1099 people, get your income, get your expenses, get your invoices, get your receipts. Start taking pictures, start creating folders, start writing down stuff. If you don't want to use pen and paper, use Word document. If you're good in Excel, create an Excel spreadsheet, but get it down. You'd be surprised if you sit still for 1 hour, what you can get done. And you may not be the person like me that want to get it all done in one day. It may take you a few weeks, but guess what? If you did an hour a day for 5 days, that's 10 hours that you can put into what you want to do. You got an hour for 10 days, Monday through Friday. Now, you may say, okay, it ain't that bad. This may be beneficial. Let me give this. Let me give this. Let me give that. That's important. You can do that. You can definitely do that. But you won't know if you don't do it. You got to be responsible, okay? It's a must. So, as we begin to close our show today, I really, and I know we're still in November, and we still got a lot of time to go this year. 32 more days. I just really want to show my gratitude for anyone that's tuning in every Saturday, every other Saturday, whenever you can, whether you're live streaming or whether you come back. I really, truly just want to say thank you. The impact is so magnificent. I so appreciate and love each one of you individually. You just don't know what this does to my spirit. This keeps me going. This motivates me because I feel like the more you know, the more I inform you, we can build a community of people that's informed about their financial circumstances. It doesn't have to be at a standstill where you have to wait once a year to ask a question. So I appreciate anyone that tunes in, that gives me feedback, that likes the information, loves the information, and also share the information. I can't stress that enough. Keep sharing. Don't stop. Keep sharing the information because, again, you don't know who it's going to impact. You don't know who need it. You don't know who's suffering in silence. This may very well be their breakthrough. So Let's Talk Finance definitely appreciates you. This is a safe space, a growing space, a learning space, an empowerment space. This is the platform that I want to provide for everyone. When you come on here, I want you to feel at home. That's why I tell you, get your pen, get your paper, take your notes, get your cocktails, get your water, get your tea, whatever it is you're drinking, just get it and come in and have fun. I love how people put their feedback in the comments, how we learn from each other. Because again, learning is endless. It's so effortlessly. And the more we keep doing it, the better we'll be at it. So share the content. Let's flood social media with Let's Talk Finance because you just never know. You never know. If you can sit on social media platforms as one of my friends and look at stuff that's not of the importance that I think may be important, then you can take that same time and hit that share button, make a comment, love, or like. Also, thank you to anyone that has went over to the YouTube page and subscribed to the YouTube channel. It's so much information on there, so much. I love giving you all information because our people lack for lack of knowledge, and that's the word. That's in the Bible. And I don't want us to lack. I want us to have all these resources. And again, a lot of people just don't have the time and the space to go sit and do the research, read the jargon, break it down, understand it, let alone make phone calls. You want it direct and straight to the point, broken down? Get on Let's Talk Finance every Saturday at 3:15. I got you. No problem. Believe you me, I dedicate my time and resources to this. Although I may be an expert at this, I still have to continuously do research. We have resources out there. And if anybody tell you that they don't do their research and use other resources, they are telling you a capital L, capital I, capital E. Now, here's what I want for you to do as you walk away from today's show. I want you to carry 4 things with you today: boldness, confidence, gratitude, and clarity. I want you to be bold. Hold down what you can hold down. Be bold with it. Do it in decency and in order. Be confident about your boldness, that you have what it is that you have. Are you ready? I asked that question last week, and I didn't put anything behind it but a question mark. But that question means so much on so many different levels. Are you ready? If my accountant calls me today and say, Shavonna, I'm going to be on vacation for the next 6 months. I need you to send me everything you have from January to November. Do you think you can have that over to me Monday? I'll do you one better. I have it for you tonight because I'm ready. Because if you stay ready, you don't have to get ready. And I'm confident that what I have will be enough for her to get started. And if she needs something else, I know she's going to reach out to me. I'm thankful for my resources. I'm thankful for what it is I have. I'm thankful that I'm able to come every Saturday and talk to my lovely audience because I love y'all, man. I love y'all so much. Y'all just don't even understand. I look forward to this. Like when I'm mad during the week, I look forward to Saturday because I know this is going to help me because I'm helping somebody. So I'm thankful for that. I'm thankful that I can say I'm building a network of small businesses, entrepreneurs, and African-American entrepreneurs where we can get together and help one another. So if you need a landscaper, if you need somebody that sells incense and fragrances, if you need a contract worker that does construction or windows or painting, I'm glad to say I have a network of people with this information, hairstylists, barbers, whatever. I'm glad to say that I'm building this network. So I love to give things in clarity. That's why I always use examples. That's why I got my side notes here to look at my examples and be like, you know what? Let me break it down to them in this manner. Because when you talk about yourself, you don't go wrong. That's why I'm the best example ever. So, as we step into 2026, take boldness, confidence, gratitude, and clarity with you. Walk into 2026 with a brand new mindset and a brand new outlook, okay? This week, I want you all to enjoy yourself because we're in that holiday season. Let me look. Oh my God. Hey, Aunt Tootie. Hey, Latrice. Hey, Mr. Is it Hazard? I'm sorry, I can't see. But hello, thank you for tuning in. Shay Marie, thank you. Shay Maria, thank you. Oh, Mr. Underwood, what's up? Hey, this talking about construction. This gentleman is in construction, heating and cooling. He got you. This is a network of people I work with. I know if you all see the comments, he say I'm rich, but the truth of the matter is he's the rich one. You know, he just leave home to go to work because he be bored because he got too much money. He tired of working. But yeah, but no, you all, thank you for tuning in. We're still in this holiday season. Please be safe. Please have fun. Please enjoy yourself. If you're still celebrating your birthday, continue to celebrate in decency and in order. Take a moment to remember those people who are less fortunate than you. Be grateful for where you are. Let's continue 2025 ending Q4 with a bang so we can go into 2026 with a knockout bang because I'm here to help you at Anointed Accounting. I'm on all social media platforms under Anointed Accounting, ANOINTED ACCOUNTING. The YouTube channel is youtube.com. Type in Anointed Accounting. Subscribe to that page if you have not done so. It's a lot of information there. Please like, love, share the content. Everyone that's on the feed today, if you're listening, hit that share button. Hit it. Let's go viral with Let's Talk Finance, because when you're talking about money, especially if you finna owe somebody, you're going to want to know what's going on. And you're going to want to know the what, whens, where, and hows. Let's flood it. I got you. Let's do it. Be safe. I'm going to go outside and play in the snow because y'all know this is my weather. I'm sorry for keeping y'all 2 extra minutes, but if it's important and you need to know, you need to know. But have fun this week, you all. I look forward to seeing you all next week. And guess what? It'll be even colder. More snow. Yes. Who can't be excited about this? All right, y'all. I'll see y'all later. Bye.